real estate investing isn't just about buying properties. It's about having a clear strategy that aligns with your financial goals. The most successful investors don't leave things to chance. They follow a structured approach that includes defining their investment goals, risk profile, location criteria, property type, and rental strategy. In this video, I will break down exactly how to structure smart and scalable property investment strategy, from setting your objectives to choosing the right property and letting concept. Whether you're just getting started or refining your approach, this guide will help you invest with confidence and purpose. Let's dive in. When you design a real estate strategy, we have to consider, let's say, three main things, okay? First would be, which location is interesting? Because different locations have different benefits and also different disadvantages. So in Germany, you typically distinguish between A locations, B locations, and C locations. A location would be prime city like Berlin, Munich, Frankfurt, Düsseldorf, Hamburg, well, maybe even Stuttgart, would be a typical A location. B locations are bigger cities, but not as big as Berlin. For example, Leipzig or Nuremberg in Bavaria, or Bonn in North Rhine-Westphalia, or Darmstadt or Wiesbaden in Hessen, for example. Okay, so these are B cities. Also pretty interesting cities. And C cities are smaller cities which are not that big. Okay, so the more we come down here, the higher the yield becomes. Okay, so if you buy real estate in a C city, the rental yield and the returns are typically higher. However, you have more risk because it might be more difficult to find a tenant. So first of all, we need to understand what is your risk profile. What is your yield expectation? And what is, in the end, your goal with that investment? Because in the A location, you might have less appreciation, for example, in comparison to a B location, because the prices are already super high in the A location. Okay? So when the location is clear, your goal is clear, what do you expect? Then we decide, well, what kind of property do you buy? Let's call it property type. Here we have three options. First, newly built. Let's do it like this. Then second would be existing property. And third would be so-called monumental with a specific architecture. So you have even greater tax benefits. So what's really important to understand also here, every option has advantages and disadvantages. So you can't say newly built apartment in the A location is the best investment you can do. This is just wrong, okay? It doesn't mean that it's worse. It just means, well, it depends on what you would like to achieve. Do we focus on appreciation? Do we focus on cash flow? Do we focus on tax benefits? What's really important to you? What do you want to eventually achieve with your real estate investment or investments? So newly built has the advantage of, we have no renovations in the near future, so maybe less headache. However, the price is already super high. The building company made the money, not you're making the money in the end. You have typically less returns because return depends on what is the rent to price ratio, and if the price is already super high, even if you have a really high rent, the ratio might not work out. Existing property, you can make more money with renovations, therefore you can save more taxes here. Maybe you can buy lower, you can increase the rent, so you have a higher appreciation. With newly built apartments, obviously the entry level is significantly higher because they are much more expensive. So you typically need more equity capital to even get started there. And maybe you can buy less apartments if you only focus on newly built. but I'm not married to existing or newly built properties. It fully depends on the strategy, and it doesn't make any difference to us, for example. You decide. Monumental property, well, there you have to be a bit careful because there are lots of rules and regulations in Germany you should be aware of. You have huge tax advantages, but often significantly more complexity when it comes to renovations in future. So this might not be a beginner investment. Many deals are not favorable for monumental properties, but some are interesting. Okay. So now when you design the strategy, you make sure, okay, which location is interesting? What do I want? Then we consider property type. Okay, advantages, disadvantages. And third step, if you buy to rent out, it would be more about, well, what is your rental strategy? Let's do it like this. So what is your strategy? Do we do maybe Airbnb? Do we do furnished apartments, shared flats for students? Do we focus on one student with a small apartment? Do we focus on young families? There are so many options. And again, everything has advantages and disadvantages here. So we need to understand especially how much time do you want to invest yourself? This is such a crucial decision because if you're working full time, maybe you even have children, you probably don't have that much time anymore. So if you buy an apartment and you want to rent it out with an Airbnb strategy, but you don't have the time to clean the apartment or to check the apartments, or if the tenant has any issue or the guest has any issue, you need to clarify, you need to solve this. It's difficult. Probably it makes more sense if your wife is not working, that your wife is just working in comparison that she or your partner in general is managing your Airbnb, because the return is not that high in comparison to the time that you spent. So this is something which is really important. How much time do you want to spend? Because if we look at scalability, your time is essential. You know, if you have one apartment with Airbnb and now your time is fully maxed out, there is no time anymore to do another Airbnb. But if you buy an apartment which is just rented out, let's call it normally, you can easily buy 10 apartments, just install a property management company, which takes care of all the tenant-related issues. So you can easily scale independently of your time, which is for most of our clients, for example, really, really interesting. So that's, well, in general, how you decide a strategy. Obviously, on the surface level, it's really difficult to explain now everything if it's not like a real case where I understand, okay, what makes sense, what doesn't make sense. But in general, this is how you decide what kind of property do you buy. It's all about location, it's property type, and it's rental strategy. Once you have decided which strategy makes sense for you or sounds most reasonable, well, then it's really easy to decide which properties you would like to buy. Because if you have decided that once, well, then you have a specific criteria. You know, for example, existing property, you want to have a certain yield. Maybe you don't want to have that much time investment yourself and maybe not that much risk. So you buy maybe already fully renovated properties, and then you just rent them out to normal people, for example. So you protect your time, you save up another 20,000 euros, and then you buy another property. And this is so crucial because if you have decided that once, property investments become pretty simple and you definitely know what you want and what you don't want, and especially why. So you're more confident in making decisions, which gives you obviously more peace of mind. So there you have it, the key components of a successful property investment strategy. Defining your goals, understanding your risk tolerance, selecting the right locations, choosing the right property type, and implementing an effective rental strategy are essential for long-term success. By following a structured approach, you reduce risks, maximize returns, and scale your portfolio strategically. If you found this video helpful, don't forget to like and subscribe for more real estate investment insights. And tell me in the comments, what's your current investment strategy, or are you still developing one? Thanks for watching, and remember, a strong strategy is the foundation of every successful property portfolio. See you in the next video.